Well, hey, gentlemen, this was a really interesting quarter, and we've got a lot of questions about just the general uncertainty, policy uncertainty, uncertainty around things. What's your view on, Stan, what's your view on how do we address that? How do you think about those types of things?
Well, I think our primary tool is diversification. Diversification is something that definitely sets us apart from a lot of other money managers. We diversify through 9 different investment classes, and we diversify within those classes, so we get extremely broad exposure. Last quarter was a good example of that because the U.S. markets, of course, all of our clients listen to the news on occasion, and they find that the U.S. markets were terrible. Well, interestingly, if you look deeply, a little more deeply at least, into your own portfolios, you'll find that international, so the European type markets, far outstripped the U.S. markets and kept the actual volatility in our portfolio at a much lower level.
That makes sense. That makes sense.
And I think that that's, an important part of what we do, and I think it's, very important to highlight that. I do think that another thing that we can probably make sure we keep in mind is that we implement triggers every single quarter. And a lot of that is to address the uncertainty. We don't know necessarily what's going to happen in the future. We recognize that, but we don't want to get caught up in the emotion of the moment when something happens. And so in order to address some of this uncertainty, we do implement triggers every quarter to say, if something should happen that we weren't necessarily counting on,
right?
How can we take some form of action to better the returns for our clients?
Well, that seems like a really nice way to separate the signals from the noise.